Hey everybody, welcome to the garden. I hope you're having a great day. Shout out to the lemon and lime lovers and everybody in between. It's time for the market recap. And if you're interested in any of the services I provide, please check out the links in the description below for both the Patreon and Discord. Okay guys, so today was quite the crazy day. There was huge news that dropped this morning. I didn't want to say anything until I could observe the market, see how everything was being absorbed, and also just reading more and more into it. So I'm going to get into exactly what happened today and how big it actually was. This really did shake the world, and it did change my outlook on some things. Now, not immediately, but definitely in the coming months. Okay, so the news I'm talking about is this. So Japan, so the Bank of Japan, which is the central bank for Japan, widened their yield target range. That may seem like gibberish, if you're not really invested in knowing how the markets kind of interlink with each other, and that's okay. You don't really need to know, but you do need to know when news drops. But the implication of this news is extremely, extremely surprising. First off, this caused a massive sell-off in the bond market. Okay, so the Bank of Japan decided to widen their yield range, which pretty much means that it's an ultimate tightening solution. Okay, and this does imply that we are much farther ahead in what I thought in the tightening schedule. That they are now pulling out all the stops to get as much ammo. And when I mean by ammo, I mean they're trying to tighten as hard as possible the markets. They want to raise rates as hard as possible sooner so that when they start to ease, they have enough ammo to ease slower, right? So they can slowly lower the interest rate hikes. And then when they do start quantitative easing again, which means lowering interest rates, they can do it slower. So that's actually a really bad sign for the economy, because if Japan, the Bank of Japan, is doing it, you can bet that every other central bank is about to follow suit. None of these central banks just operate on their own. They're all commingling and talking to each other to make sure everyone's staying as a team, holding the narrative together and moving in tandem. So we may get in a month or so the Federal Reserve here in the States doing something similar. So we may be getting ready for a shock of tightening to the markets, which could cause a short-term plunge. However, this behavior is indicative of the end of the tightening process. So we really may be coming towards a massive policy shift much sooner in 2023 than I thought. I was looking for potentially, as early as late spring to summertime, and maybe as late as like fall to early winter. But no, we are getting some signals here now that we may see them begin to ease Q2, early Q2. So this is huge. This is massive. It caused a big ripple effect all through the markets. The markets were pretty wild today. We were trading down, trading up. But the things that have changed via my outlook. So what's changed in my outlook is the dollar and gold and silver. Now, it's not that it's not going to do what I think it's going to do, but the probabilities have decreased dramatically. So I have been looking for dollar to find strength to the upside and get towards that higher blue zone between 108 to 106.560. But with this recent news, I'm gonna say it's far more unlikely now. Doesn't mean it won't happen, but the probabilities now are leaning towards a continued move down to at least 102 and potentially all the way down towards 101 to test this ascending trend line now. Now, this doesn't mean we're not going to go up again. I do foresee that as we come towards this zone down here, we will find a bid to the upside, but actually getting all the way back up towards the 108s, the 106s, that will be quite a tough move for the dollar unless it's on the back of the Fed coming out and being extremely hawkish as pretty much like their last tightening maneuver. Okay, so hopefully this is making sense, but I am seeing short-term further downside now and the dollar. So we're not going to get that head and shoulder structure like that. That doesn't seem like it's in the cards. And we're likely going to come down towards this ascending trend line. And then maybe from there we should see an impulse higher. But if we get any dovish news, any news that's dovish that weakens the dollar here, this will plunge really hard, okay? Because now a lot of the smart money, us included, we who have been positioning ourselves long on the markets, right? We've been building out longs. We've been trying to make sure that we're positioned for big moves to the upside. Now we're forced to move faster. We're forced to build faster. So the smart money is now looking to get as much on the long side as possible, but they're going to have to try and scare the retailers as well. So watch for retail news to be extremely bearish and hawkish, but you're going to see big money and smart money trying to fill all those sell orders with our buys. Okay, so watch for the dollar come down a little further. Now let's take a look at the Dow. So Dow, as you can see, was retracing, ended up closing pretty strong in the day. Nice closure. Couldn't actually retrace all the way back down to the descending trend line. Did slow down as we came a little lower. We'll see if we get that continuation lower. In my mind, we may find some buying to kind of grind us up towards 33.6 to fill out this bearish fair value gap that's formed right here. Let me actually get rid of this doodle here. I'm going to get rid of this doodle because, well, I'm going to get rid of all of these doodles because I think it's been there long enough. Again, I think you guys know my general idea of where we're going. So this bearish fair value gap looks to me to be the target in the short term, right? So we may see price come up to here, fill out the liquidity in this area here, and then if we're going to have that continuation down, break down from there, okay, and then come back towards this descending trend line we broke bullish. All right, and if we get towards these levels, we're still looking at these fair value gap levels potentially to be liquidity grabs for us to get enough fuel to go up higher. All right, next is S&P. So S&P, just like the Dow, having a nice daily candle close. I still see us coming lower, but we are beginning a potential lower high swing here to then come lower back to the level I'm looking at. Okay, so watch for us to potentially come all the way back up to 39.18 on the S&P, testing the low side of this resistance as well as this consolidation. Next is NASDAQ. NASDAQ holding the support line here at 11,071. It's likely going to hold here for some time. Not the most bullish candle, but definitely very nice to see it held this level. Watch for it to come back up and look at the fair value gap it has right above its head. See, fair value gaps are great, guys. They give us a short-term target zone to look for. You can look for continuation to the downside once we get to here, or we can start looking for potential moves higher. Just depends on what the Dow and the S&P are going to do, but the probabilities are likely we'll get up to this level here, and then we'll likely tend to break lower. So something like this will likely happen. Okay. All right. Next is oil. So oil, just following the path. Nothing's really changed here. Came back to this fair value gap here. Pretty much filled just about all of it. Didn't close through it, so we're not going to get rid of it completely, but did trade right through it. Potentially this is the higher low that I had kind of drawn very ugly over here. And then we're seeing that move up now towards this higher fair value gap to fill out the liquidity there. Oil to me is in a very bullish area here. Took out the lows here, grabbed the liquidity from there. So you have like a little swing failure pattern here. And now you're potentially going to see that continuation up and beginning a larger move going towards the 90s, the hundreds, and even higher. Because remember, guys, what have I said about oil? If you've been following me, oil is extremely bullish when you're looking at the weekly and monthly. And I do think there's going to be a spike in demand as the weather gets colder and colder in Europe for oil to heat the country. And I do think supply is not there to meet that demand that's coming. Next is gold. So gold and silver have changed in my outlook just like the dollar. Now, doesn't mean it's changed right now. I still think gold can come down. It is in my rising wedge structure still, but the probabilities have decreased dramatically that we do see this come down significantly. Now, we may still break this wedge and come down towards this fair value gap here, which is fine, but the deeper retrace under is going to be very difficult without a major spike in the dollar. I don't see that happening. And the probabilities of this rising wedge playing out now has decreased. Now, it's still more probable it does, because you have to respect the price action above all, but it's decreased now because there's going to be weight from the Bank of Japan to essentially it's going to start slowing down on the hikes. Everyone's going to be pricing that in now. So this is going to be tough. This is going to be tough if we're looking for downside. Now, I'm personally bullish on gold, right? I was looking for a bullish retracement. So if you're in the swing trade service, we're still long NEM, we're long GLDs. We are set up for a move up in gold, but I was looking for a bullish retracement to build out a more bullish structure to the downside, so we could potentially get a bigger move. But a lot of that has changed. I do think now, if we should have that continuation from what we had, today, then we're gonna watch this probably burst up back towards 1850 and potentially towards 1870. So I'm very bullish on gold. Whether it breaks down from this wedge or not, I'm bullish one way or the other. Next is silver. Silver, same thing. Bursted up, took out the high, fighting in the fair value gaps right now. Rejected into this fair value gap, held, but again, it was just off the news of what happened with the Bank of Japan. So the deeper retracement down, it doesn't seem likely. Now, we may get that move back down towards this fair value gap here, so around $22, but it's looking very powerful. And I'm just watching the chart and looking how the news was digested. It seems likely that we're going to see some sort of burst up for the metals. Okay, all right. Now let's take a look at Bitcoin, and crypto did great as well off of that news. Crypto reversed very, very hard to the upside. I'm liking what I'm seeing. Now we have a fair value gap we want to target here, so let me put this back on the chart. So this fair value gap right here is a clear target to me. So as low as 18,585 all the way up to 20,398. Getting towards the low end of this fair value gap to the upside clearly will grab the liquidity above this high pivot. And then getting up into this level here gets us back into this consolidation. And in my opinion, if we should find ourselves back into this fair value gap, there's a good chance that we start a bullish continuation structure and have a move higher. So going back towards the 22s, 23s, potentially even all the way back up towards 25. Okay, so it does depend though. Does depend on what we're going to be hearing from the from the banks, the central banks, as we come into January. So just keep that in mind. I do like where we held, right? So we came down, we sold off down, and we came into this consolidation here. Right, so we came into the consolidation, and so far we're having a very nice bounce up. We have about an hour left in this daily candle, so if we can get a bullish engulfing candle, and we're trading into this bearish fair value gap right now, okay, we may see this full fair value gap get filled as we come into the next daily candle. And what we're going to be looking for is a pullback back to this consolidation, hold that, and then the continuation higher, and then we're very likely to break this high wick and get towards the low end of this larger consolidation here. Okay, so I am more bullish short term. I was more bullish short term even before what happened with Japan, but now I have to be, I have to lean more bullish. But I am bracing, for a really, really, really hawkish pivot coming for the Federal Reserve. They're going to come in hard, most likely. A lot of these central banks, the ECB, they're going to come in really, really hard and hawkish, because this is going to be amongst one of the last times they're going to be raising rates hard. I think as we go into early 2023, we're going to start getting signs of them slowing it down significantly, and it's probably going to happen much faster than we all anticipated. All right, everyone, that is it. Thank you for watching the video. If you have any questions, make sure to ask me in the Discord or leave a comment on the YouTube video. Remember, if you're interested in any of those services I provide, I provide a swing trade service, a tutoring service, and a day trading room service. If you're interested in any of those, make sure to check out that Patreon link in the description. And remember, be patient, be vigilant, and be nimble. I love you guys. Take care.